Welcome to Let's Chat, the show where we talk about selling businesses. My name is Jim Parker. I sell businesses with gross sales of $1 million and more. I'm really excited because today we have with us Tammy Roberts from Live Oak Bank. We are going to be talking about myths and SBA lending. How you doing today, Tammy?
I'm doing great. How are you doing?
I'm doing very well. Tammy, I'm so glad you joined us today because there are so many myths out there about SBA lending, and you and I chatted about it. And I kind of want today just to go over those myths and kind of put business owners and brokers both on the right track of, what they can expect and what is really a myth. So before we begin, can you give like a 60-second rundown on 7A SBA lending?
Yeah, absolutely. Current status or just as, general.
General overview so the business owners know what we're talking about when we're talking about SBA.
Absolutely. So the SBA 7A program, a lot of folks use for acquiring businesses. There's two different types of SBA loans. The 7A is the most frequently used simply because it's user friendly and you can use it for a variety of purposes. You can use it to acquire a business. You can use it to purchase real estate. You can use it for working capital, purchasing equipment. It has a lot of diversity to it, so it's the most commonly used product in the 7A program. Excuse me, in the SBA program.
Okay, excellent. Tammy, I just want to jump right into it now. And, the number one myth I think out there is some people believe that SBA loans just are not borrow friendly. Can you give a little response to that?
Yeah, absolutely. It really is one of those common misconceptions that SBA loans are not borrower friendly, which is actually untrue. The SBA created the SBA loans to be borrower friendly. When you compare it to a conventional loan, they're more generally flexible, especially with the equity or down payment requirements. You can typically have a less down payment that you would with a conventional loan. Typically on a 7A loan, you're looking at about 10% equity as opposed to a conventional where you'd be looking at a 20% equity injection. There's a lot more flexible repayment terms, can be up to 10 years on a 10-year amortization with no balloon payments. So there's a lot of flexibility there as opposed to a conventional loan that's typically on a 5-year or a 7-year, or you might have a balloon payment due within a period of time. 25-year amortization and term offers a lot of flexibility with purchasing real estate with the SBA, as opposed to a conventional loan that would be on a 20-year term, typically due in 5, leaving the borrower with very little option other than to refinance that portion that remains or pay it off in full. So the industry standard interest rates change pretty much on a regular basis, but that's with any loan. Right now we're on a nice downward trend with some variable rates coming down, with prime rate coming down. But in most cases, the industry standard rates go across the board are more favorable than conventional loans, especially with the non-SBA banks.
Yeah, and I had to tell you, probably 80% of my deals that I do, Tammy, are SBA loans. So quite a few of the deals that I do are SBA loans. The ones that are not is usually like private equity groups, things like that coming in. So I think it's really important that somebody out there that's either a business broker that's selling businesses for a few $1 million, or somebody that's looking to acquire a business or sell a business. I think it's really important that they know the SBA lending, because when you start talking about enterprise value of $500,000 to $5 million, that's like the prime target for SBA lending.
You're spot on with that too, because I feel like in a lot of conventional scenarios, enterprise value isn't really considered the way that it is in an SBA transaction. They don't give a lot of value to that enterprise value.
Mm-hmm. No, real quick, you were talking about it's a 10-year amortization loan for a straight when you're doing it with somebody's acquiring a business. But then you mentioned 25 years when it comes to commercial property. So what is it? 51% of the overall loan price, if that's attributed to real estate, then you can do the whole loan for 25 years, correct?
Yeah, if the appraised value of the real estate is 51% of the transaction, you can actually amortize that entire transaction over the 25-year term, 25-year amortization. Now, if it's not quite 51% and there's some variability there, what we can do is we'll take the 10-year, because a straight business acquisition is on a 10-year term, 10-year amortization. The real estate portion is on 25-year term, 25-year amortization. If you had, just a quick example, if you had, $1 million in real estate and $1 million in the business valuation of the business that you're purchasing, then what we would do is we would blend out the 25 years and 10 years for those two dollar amounts, and then you might get 17 or 18 years out of it. So we can blend them all together and get you a longer amortization if you're purchasing real estate. So that can sometimes be very favorable, because sometimes business owners don't know what the new lease agreement is going to be. They don't know what the new lease payment is going to be. They have not yet decided that. And if the real estate is a part of the acquisition, it's a benefit for them to pick up that asset as well. And they can get more favorable terms by doing that.
Fantastic, fantastic. Are you ready to move on to myth number two? A lot of people say that SBA lending is slow and inefficient, and that's not my feeling on it. But maybe you can give some feedback on that misperception.
Yeah, I hear that a lot. And I think where that common misconception comes with is, number one, you always want to make sure that you're working with a preferred lender. And the reason you want to do that is because preferred lenders are approved by the SBA to underwrite their own loans, make all of their own credit decisions, close all of their own loans. They don't have to go directly to the SBA for something specific or for loan approval. They've been approved by the SBA to do their own transactions. And so that really, number one, speeds up the process, because typically when you're working with a non-preferred lender, that bank has to go through their process to approve it themselves. And then they have to send that package to the SBA. And there's some typical back and forth, as in any scenario with underwriting. So it just kind of puts a more about 4 to 6 week lag time. So always want to make sure you're working with a preferred lender. That can sometimes become where the slow and inefficient is. It does also require some additional documentation. The lender that your borrowers are working with should always try to give a list of that documentation up front, so that they know what's going to be expected throughout the process. But for the most part, the type of financial information that they're going to require is going to be tax returns, personal financials, bank statements, those types of things that they can get in advance to speed up the process. So my number one first question, if I'm a borrower, that I'm asking my lender is, I need a list of documents so that I can get them all to you in one package, and that is going to speed up the process tremendously.
Great, great. And how long are you looking at, Tammy? From the time, let's say we go under contract with the business until the time we can close on it. What do you think that time frame should look like from a practical standpoint?
Yeah, from what I think it should look like, from if you're working with one of the lending experts at a financial institution, it shouldn't take any more than 5 to 7 business days, 10 maybe max, to underwrite a loan once you get a full application. There's going to be some back and forth, there's going to be some questions, and that's to be expected. But once that loan goes through the underwriting process, it should be about 24 hours for a commitment letter. And right now, I can't speak to everybody else's closing times, but what I can speak to is Live Oak's personal closing times right now. We're averaging about 42 calendar days from the time we get an approval to the time that we are able to close a loan. Now, I will say that likely a lot of folks could do that if everybody's working together to get the documentation in a timely manner. And sometimes that is what can be cumbersome when we aren't getting things on time, or the closing team isn't getting things on time, or evaluations come back, or those types of reports are stalled. So sometimes that can make it a little bit longer, but it shouldn't be any more than 60 days to close once you've received an approval, in my opinion.
Yeah, and you're talking about the approval. And if anybody's listening, I usually tell buyers and sellers we're looking at about a 90-day closing period from the time that we go under contract between the buyer and the seller. There's more to play there outside of what you're doing, Tammy. That's from the time we actually, all parties have agreed upon everything signed off in the LOI or the contract. We're looking at about a 90-day closing period. I think that it can be done quicker than that, but I think 90 days in the whole ball of wax, Tammy, is pretty appropriate because it's hard because sometimes the buyer's got another job that they're still working at while they're in the process of acquiring the business. The seller's trying to run their business as well. Then you've got attorneys and maybe even a franchisor, landlord, all these third party people that are involved. And, you slow it up like, oh, you can't get the information for a couple of days and then you get it. And then the other party, it takes them a couple of days. And all those couple of days kind of add up. So the best is if everybody can just respond as quickly as they can and go into it without that pressure of we got to do it in 60 days. Like I think that 90 days gives everybody room to kind of.
And to your point, let's face it, life happens to everybody. Kids get sick, people go on vacation, and sometimes it's all happening at the same time, to your point, that this is happening for them. So, yeah, absolutely. And there's a lot of due diligence that your borrowers are going to go through in that process too, and that you're advising them to go through. So that is also going to be part of the process. It's not just the loan, it's the entire process that
Due diligence and things like that. Yep. Yep, getting landlord approval for the lease. There's a lot of different things you need to do in there. One thing that I think is really, this I guess is more for the brokers out there than the business owners or the buyers, but kind of staying on top of everything and knowing what the lender's going to want or expect. Like Stephanie's my closing coordinator, so once we go under contract, she kind of helps guide the process with you and the landlord, the seller, the buyer, attorneys, CPAs, everybody that's involved in the transaction. And she kind of already knows what you're going to be expecting down the road, Tammy. She'd be like to the seller, okay, I know you just collected this information, but in about another week or two, we can expect that we're going to get a list and this kind of information is going to be asked. Or buyer, you may want to start working on your insurance policy, if they haven't talked to you already, because that could take a while. And I think as a on top of kind of foreseeing what's going to happen before the bank even asks you for it, so that when you do ask for it, Tammy, the information's there or close to being there.
You know what, too, Jim, and I think I have done this for you before, but what I try to do for a lot of my brokers, because I love when my brokers stay involved, there is nothing that's more helpful than when everybody's working together as a team, and that the smoothest transactions are when brokers are involved. They're helping get information, gather information, keep everything on track. But what I have found to be super helpful to everybody in the process is I tried to give a preliminary closing checklist out like in the very beginning, because these are all the items that if and when we get to that point, you're going to need the landlord waiver, the attorney contact, life insurance, transaction documents, stock purchase and certificates, all the things that come along with it are on that list. And I think it's super helpful for you all to have that, as well as the customer to have it. And if you see it in the beginning, you can already be thinking about the process, and that makes it less cumbersome. You know what to expect. That sometimes is what the problem is. People, it's unexpected and they just don't know.
Yeah, and I guess my biggest advice to buyers and sellers out there is just when stuff is asked for, just try to get it as quick as you possibly can. Because like I said, all those couple of days that it takes, they all start to add up. But I think that's okay too. That's why I think when you start shooting for a 90-day closing from the time we go under contract, and as long as everybody's moving relatively quickly and smoothly, we're usually able to obtain that.
Yeah, absolutely. And if you can do it sooner, great. But if you hit your 90 days, all's good.
Great. Any other advice on how to make it more faster or more efficient on the buyer's end, seller's end, or broker's end?
Yeah, what I would say that is super helpful is when you are submitting your package, your loan package, please try to make it as complete as possible. That eliminates some of the back and forth. And you'll get from me, and I know you've seen the email from me, hey, here's what we need for your application. Here's all the forms that you need to fill out. And if you can send everything all at one time, whether it's to you in a Dropbox and then you send a completed Dropbox, or if it's we do a share file and they just upload things and when it's ready, it's ready. What happens is when people start piecemealing documents in an email, here's my tax return, here's this, here's that. Sometimes, I hate to say it, but human nature takes over and things get lost in that.
Yeah.
You might think that you didn't get that one document out, and it just got lost in an email somewhere. Or sometimes they go to spam for some reason. But I would say, number one, if you could do a complete application as complete as possible at the beginning, that's super helpful. Another helpful thing, that if all of your documents could be facing the right way, and I know that sounds silly, right? Sounds
No,
silly,
no.
but for as long as like you or I or someone else has to take that extra 5, 6 minutes to rotate them all and make them all legible, that's another 5 or 6 minutes that is going into the process, right? And so just if those types of things are very, very helpful. And then just to read over that preliminary checklist that you're going to get so you know what to expect. I think all of those things are really going to make things a lot smoother and a lot faster for any borrower.
Right, right. And, adding that thing where things are upside down, not taking pictures of all the documents and sending them over by photo, but actually going and getting them scanned. If you don't have a scanner, go to a local UPS store or something like that and get the documents scanned.
Well, and at the end of the day, too, isn't it all about presentation? You want to present the nicest loan package that you possibly can, right? And that's important because you're going to look at that. I'm going to look at that. The lender is going to, whoever their lender is going to look at. How are we receiving this package and what does it look like?
Yeah. Does it look professional? Yeah, it plays a big, big part in it, doesn't it, Tammy?
It really does. It really does. It shows the
So
seriousness.
I think another thing too is communicating. Just making sure that the buyer, the seller, the brokers, the attorneys, CPAs, and the whole process, not just with the lending, but all the way through, everybody's just communicating. They know what's going on. You had mentioned earlier that vacations happen, and I've seen that too. And it's best to let all parties know when somebody's going to be on vacation. So if there is documents that we know are going to be needed and we know you're going on vacation, maybe we'll ask those a little bit earlier so that we can, we'll keep working on stuff while you're enjoying your vacation.
Yeah. Oh, if you can have a backup person that's helping, that's great. But if you can't, like you said, that communication that, hey, I'm going to be unavailable. Hey, I'm not going to be receiving your documents, or hey, I'm not going to be sending any. Then everybody knows, oh, you're not just being ignored. Things are just happening in life.
Yeah. And I think another big one too is communicating with the seller, communicating with their CPA, or their bookkeeper, whoever's doing their books, and making sure they stress how important it is to get the month end financials done as soon as possible going into the new month.
Yeah, their CPA should never be surprised that they're selling their business. And honestly, I have seen that, and I you have too. That is really important to make sure that the financials are as current as possible at all times during the process, because that's going to be something that's always going to be looked at from month to month as you go through the process. Everything needs to be current.
Right, and right now there's a shortage of CPAs out there. We have like a lot of last couple of years, a lot of the business owners that I've talked to or I've been working with, unlike the other 20 some years of my career, it just seems the last couple of years is the financials are more delayed than they ever have been. And it's, there's a major shortage of CPAs in the country right now. So as a business owner, when you are, and this is what I tell my sellers, now we're going through the sales process. You got to, make sure your CPA knows. I would love to talk to your CPA, get them on board, but also like, make sure that the CPA or your bookkeeper moves your financials and your work up to the top of the pile, so that we can get them, and not, do them where they're coming in late. I think that's been the big thing.
Jim, do you, when tax season comes, I see a lot of business owners, and I don't know if you know the answer, just a question out there. They'll file an extension while their business is for sale. Is that something that you recommend, that they typically get their tax
No, not at
returns done?
all. I mean, if you're gonna be selling your business, you should get your tax returns done as soon as possible. Right now, we're recording this towards the end. It's December of 24. It's probably not going to be released until 25. But the business owners that I'm talking to already, I'm telling them file your tax return in 2025 as soon as you possibly can. Speed up the process. Do not wait until the March 15th deadline for corporations. If you can do this in early February, the better. And no, I agree with you, Tammy. When you're selling your business, you do not want to file extensions, and you want to keep your financials up to date at all times.
Yeah. I think that kind of plays into your CPA comment too, just keeping everything current. Yeah.
Yeah, that's a good. That's a good point. Tammy, this is one that myth number three. A lot of business owners and buyers think that the SBA is lending the money directly to make the acquisition happen. Can you kind of explain to everybody what's really happening?
Yeah, I hear that all the time. Will the SBA approve my loan? Will the SBA give me money? And it's funny because that is the perception. And the SBA, the bank lends the money. So in this situation, it would be Live Oak, and the debt is partially guaranteed by the Small Business Administration. That allows the bank to provide credit for the borrower who might not otherwise qualify, or it might be a little bit riskier, right? Because the bank is getting a 75% guarantee on the loan that it will be repaid. And also allows for those favorable terms. But I sort of liken it to when you're buying a house and you have to pay private mortgage insurance. The SBA is really just an insurance company, or acts like an insurance company. Much like with private mortgage insurance, if you're buying a house and you're not putting 20% down, typically you have to pay an extra $100 a month to have private mortgage insurance, so that Fannie Mae or Freddie Mac will extend a loan for a lesser down payment. So it's very similar to that, as in it's more acts like an insurance for the bank. But the bank is the one lending the money. Even when you're not a preferred lender and you are going to the SBA to get approval, the SBA is not giving you money. Yeah.
Yeah, the bank is is borrowing the money. The SBA is
Hmm.
guaranteeing a portion of that, and that's how you're able to get the loans done, and make banks want to lend these kind of loans to business owners. And Tammy, this I think is really important because to me, I guess me and you, we live this every day. We live it, and 100% of what you do is SBA loans. 80% of the deals that I sell are SBA loans are involved. And the SBA is a fantastic vehicle to get acquisitions done. And we're really lucky because in the United States we have a program like that. Most countries, and let's take Canada, which is our neighbor north to us, they don't have anything like this, and it makes it a lot harder to sell businesses when you don't have a government program to help with acquisitions of businesses.
Yeah, absolutely. Those flexible terms are just amazing. I mean, they open the doors for so many borrowers that want to move on in life to their next chapter. Maybe they worked in corporate America for many, many years, and then, hey, I'm going to retire. I'm going to move to South Florida, but I'm not ready to retire. I want to own my own business. I want to do my own thing. And it really helps open up a lot of doors for folks like that want to buy a business, with the flexibility of it and with the favorable terms. But it also opens up a whole new pool of buyers for folks that want to sell. So it's advantageous to both sides.
It really is. I mean, you're talking about, somebody can acquire a business with 10% down, with an SBA program. That's huge. That's fantastic. You're buying a $2 million business. You only need $200,000 down. I know that sounds like a lot of money, but when you're buying a $2 million business, 200 grand isn't that much. And then you get working capital back in it as well to help you out, to get a good start out of the gate. It, so Tammy, I'm going to throw a myth in there that I just kind of thought of while we were talking. So I'm going to kind of throw you off guard, but this is one that, for some reason, I've talked to a couple buyers in the last couple years that were under the impression that the SBA or the lender themselves is doing due diligence and checking out how good the business is or not. And so I'm going to say myth number four is people, the myth that the lender or the SBA is actually doing some kind of due diligence on the business.
That's interesting because I actually have received that question, I want to say probably 5 or 6 times in the last 6 months. What kind of due diligence does the bank do? Are you going to do all of this type? Number one, I know you always tell your buyers and sellers, I don't care who's doing it, do your own, right? That's the you could have the best CPA in the world and do your own due diligence, whatever you feel is important to you as the person buying the business, right? But there is certain due diligence that the lender does. Now, is it as extensive as what the borrower should be doing? Not necessarily. The bank will order a business valuation from a third party company. It's a pretty extensive report. It will go over, all the demographic market trends. They'll go through the financials, make sure that the value of the business is truly there. Um, and of course, we'll go through the financials through the underwriting process, verify the tax returns and the validity of all the information provided to the best of our ability as prudent lenders. But
You're getting transcripts from the IRS on the to make sure that they match up with tax returns.
mhm. I've had folks ask me about quality of earnings. Will the bank order a quality of earnings report? No, not necessarily. Sometimes we will require one, but we don't always require one. And when I say we, I mean any institution. Some folks probably don't do it at all. And with certain loans, we will order a feasibility study or something like that. But for the most part, the borrower should be doing more quality of earnings and digging deeper than even the bank is, in my opinion. All prudent lenders try to do the best that they can, but it's not going to be as extensive, in my opinion, as what the borrower should be doing. Does that make sense?
Okay, so Tammy, we got kind of cut off there, but we were talking about due diligence and how a buyer shouldn't leave it up to a lender to do due diligence. I realized that you guys over at Live Oak Bank, apologize. You guys are actually doing. You guys are asking for 12 months worth of bank statements from the seller to reconcile it, right?
Yeah. Yeah, absolutely.
But most banks do not do that. And even though you guys are doing that, like at the end of the day, if I was a buyer, I wouldn't be looking at it and going, "Oh, the bank's going to be doing my due diligence." They should be doing their own due diligence. I don't think the banks are really getting that deep into it as much as a buyer should be with their CPA.
Yeah, absolutely. And we're not reviewing any merchant statements or anything like that, unless, something came up that we would want to do that. But, absolutely, that's not, I don't think that's a normal thing for folks to collect bank statements on the financial side. I'm glad that we do. It's just an extra support measure because, we want to make sure that we're protecting our buyers and being prudent lenders, of course. It's just an extra layer we added, I want to say probably back in 2020 or 2019, to kind of offset some of, what folks might see as, if revenues are going up because somebody's, or lagging behind for that matter, because somebody's, taking their foot off the gas, I'm selling, so that you can see those trends. We were just interested in seeing those trends from a research standpoint, and then we found that we really liked it. So I definitely would encourage all borrowers, do your own due diligence. This is a big step in your life. This is your next chapter. This is a big investment.
Yeah, I can't emphasize what you're saying enough. That this is a big step for a buyer, and really be prudent and make sure that you're really doing the due diligence. And I don't think any other lender that I've come across does that. Ask for the bank statements on a regular, normal course of business, unless there's something that pops up that they're asking about specifically. But you had mentioned a few times about quality of earnings. So I just wanted to point out to the viewers, whether you're a business broker, business owner, or a buyer, if you want to learn more about quality of earnings, what Tammy was talking about in terms of that, there's a whole video that I did where I interviewed somebody about quality of earnings. So just go to YouTube, Let's Chat with Jim Parker, and you can go watch that QOV report there. So myth number 5, Tammy, and a lot of business owners think that the SBA is only for businesses that are struggling. So maybe you can touch on that.
Yeah, so that is typically the old school perception that the SBA is only for underperforming businesses or borrowers with bad credit that wouldn't otherwise qualify for a loan, when that is like so far from the truth. The SBA does, a lot of, we work with a lot of sophisticated big businesses with high-end loan structures. It's the existence of the SBA and their flexible terms and all of that that has kind of brought this whole thing into existence. It's not for folks who can't qualify for loans otherwise. I mean, it is obviously the lender's, requirement to do their due diligence and get into the, the five C's of lending, right? And you want to dig into all of that. And that's where all of that comes into play. It's not for, underperforming businesses or people that wouldn't qualify. When we're underwriting a loan, we're getting into the five C's, the character, the capacity, the conditions of the business, collateral, capital, all of that. And, that all comes into, part of the process of seeing if we can work with these types of businesses and get them financed. So it is absolutely not for, the lowest of the low. We do a lot of due diligence. We do a lot of high-end sophisticated business for high-end sophisticated borrowers that have money to spend, that have great credit. It's not what people think it is. So I tell, and that is, I think, one of my biggest pet peeves. Is that's always what I get asked. Oh, you do those trash loans? No, absolutely not. I have done some wonderful loans for some wonderful people that are thriving and successful every day. And that is what the SBA program is for.
Yeah, there you go. Yeah. And again, we are so lucky that we have the SBA program here in the United States. And the thing is, like, even buyers that, are have millions of dollars, let's say they're worth $5 or $6 million. If they're buying a business for a million or two, they're still doing an SBA loan. Even if they have the money to buy the business in cash, they're still doing an SBA loan because they want to leverage it.
Yeah, absolutely. Why are you going to, put all your money into so cash is king, right? You always want to keep your liquidity in your pocket if you can. And since the SBA lifted the requirement that you can't have a certain amount of net worth, that's gone now. So literally, millionaires can use the SBA loan program. At one point, there was a cap. I think it was 14 million. I can't think of it off the top of my head, but where if your tangible worth was more than that you couldn't qualify. But they lifted that recently, back when they did their last updates. And I've actually gotten a lot of activity from folks who have wanted to use the SBA program but couldn't qualify because of that. And they're great borrowers, they're great buyers. And I'm glad they lifted that, because that really kind of closed some pool of buyers out there. So that was a really great change that they made.
Yeah, no, and I agree. And this isn't just good for, because we're talking about earlier. It's not SBA loans are not just good for the buyer, but they're also good for the seller. But they're also good for the U.S. economy in a whole. I mean, think about right now, 40% of all business owners out there were born before 1964. So we have this huge wave of baby boomers that are going to be retiring and need to be able to sell their businesses. There would be no way for them to cash out, or
Mhm.
that many people to cash out, if we didn't have this kind of a program. And it also allows business owners to get loans if they're not looking to sell, but to expand their operation. And it just helps the small business owner from a monetary standpoint. And the stronger small businesses are in our country, the better our overall economy is, and the better overall it is for all of us.
Hmm. Absolutely, absolutely. And like you said, like, it doesn't just have to be buying a business. They can be buying the building that they've been renting for years, or buying a building because they've outgrown the building that they're in, or maybe they want to open a second location, or they want to buy an add-on business. Maybe they're a plumbing company and they want to buy plumbing supply company or something, and an expansion that way. It allows companies to expand, and in some cases, Jim, with no money down, depending on the circumstances and the rules and the guidelines. But there are many, many, many opportunities where business owners are expanding. They're using the SBA program to do so, and they're not having to put any money into it.
And that money is going to go to the employees. It's going to go to suppliers. All the way around. It's just helping the economy. So myth number 6, Tammy, is that people believe that SBA loans require extensive collateral.
Not exactly correct.
What kind of collateral does a buyer need to qualify for an SBA loan?
Well, so collateral is when it's available. So the SBA rules are, yes, if you're buying a business, the collateral will be the business assets, the receivable, the inventory, the equipment, kind of a blanket business asset, to be expected, right? If you're buying the real estate with the business, obviously the real estate is going to become the collateral. And then as secondary collateral, the SBA requirement is that if there is 25% equity or more available in a residence owned by the borrower, then it becomes available collateral, and the lender is required to put a secondary lien on that up to the amount of the collateral shortfall. So, whatever that gap is from the 75 to the 25. Now, I've had loans where the folks don't own property. That's not a deal breaker. You can't require something that somebody doesn't have. I am of the mindset, and I may or may not be the right person to ask, but I don't believe collateral makes a good loan better. Don't think it makes a bad loan good. I'm very much of the mindset, and I would pretty much think this is Live Oak's philosophy too. We're a cash flow lender, and so cash flow is what is going to pay the loan back, right? Is what going to make you successful. I have very rarely seen someone's primary residence make a loan payment on their business loan. I mean, call me crazy, but I just have never seen it happen. The collateral piece becomes important to the lender in case of default, obviously. But it is not, if the collateral is not available or someone doesn't have collateral, does not mean that they cannot obtain an SBA loan. Now, sometimes it doesn't always have to be a primary residence either, as the secondary piece. If there's some investment properties that are owned and they'd rather pledge those and there's enough equity in them to get to where we need to go, they could certainly do that. And again, if you don't own anything, you can't take it. So always expect that the business that you're buying, their assets, those assets are going to be the collateral, whether it's inventory, equipment, AR, any of that. But over and above what the business has, that would be your secondary collateral. That would be the real estate owned by the borrower. And sometimes that gets a little bit dicey, to make sure that, where are we trying to figure out where that equity lies or if they have enough. Some banks will do full appraisals to find that out. Some banks will do drive-bys. It's really just the process of whatever lender you're using. But we typically what we try to do is when we're underwriting the loan till we have that full value amount, we'll use what's provided by the borrower on their personal financial statement, do a Zillow report to see, hey, do we think we need to do a full appraisal to get the true value there to determine what course of action to take.
Okay. And then you guys are really concentrating on, what their background and experience is. How is that applicable to the business they're buying, the quality of the business they're buying, their credit score, things like that. If everything else is basically looking really strong and they're lacking the collateral, you guys are okay with that, it sounds like, and a lot of lenders are.
Yeah, absolutely. I think the main focus typically will be on, the business's ability to repay the debt, right? But then the experience of the person borrowing the money. Do they have the experience? Maybe not necessarily industry experience, but have they managed people before? Have they been in a supervisory capacity? Have they managed operations before? What is that person's background, and how does it relate to what they're about to do? Right? It's almost like, you have to dig into the resume. And, if you are capable of doing these things, but, you how your current resume that you have that the lender's going to ask you for doesn't speak to those items, you want to make sure you're refreshing your information to speak to your ability to run this business. You're not applying for a job, but you want to be able to show that you have the wherewithal to run this business that you're about to buy and the experience to do it, because that's going to be important. You don't want to fake it till you make it, right? And
Yeah.
you know what I've had, interesting enough, I've had a few of my borrowers say to me when I've asked for a resume, oh, well, I haven't done that in a really long time. I really should update that. Yeah, that'd be great. We want your most experience that you have. And then they've come back to me and they said, I rewrote my entire resume because I didn't really truly realize what I was capable of or what
That's great.
I've actually been doing. And I was like, see, that's amazing.
That's fantastic.
Doing all these things for someone else for so long. Now do it for yourself. So,
Right, right, and that's the great thing about what you do, Tammy. In our country, like that's what you're brought up as a kid, like growing up. That's part of the American dream is owning your own business, and very few people actually have the guts to pull that trigger. And you're making people's dreams come true every day, and I think that's fantastic for both of us. I think that's fantastic.
well, Jim, I think I told you the story before. That's right. That's why I got into doing this. Right. I wanted to own my own business. That was my dream. And I don't want to say I didn't have the guts, but I didn't have the capital to do it. So I stewed on it for many years, and I had my business plan, my projections, and I had all my ducks in a row. And then I learned that I could help other people realize their dreams, and that's how I got into SBA lending.
That is great. That is great. That was something I didn't know about you, Tammy. I'm gonna have to next time we're together. We're gonna have to sit down and talk about that. That's very interesting. So we covered the six myths that we had spoken over. Actually, we had spoken about five. I threw a sixth one in there for you. Maybe just leave real quick with a couple practical pieces of advice for borrowers. So, like, what are the common mistakes that you see borrowers make when they're trying to get an SBA loan, and how can they avoid those?
Yeah. I'll go back to your application, make sure it's complete and looks good. Another thing, I hate to say it, but your team, build the right team. We are all experts at what we do. This is not what, and I don't mean this in any bad way, but I tell people this is what I do every day. This is not what you do every day. You are not supposed to know all the rules, all the guidelines. You're not supposed to. You're
Right.
supposed to know what you're an expert on. Much like Jim, you're supposed to know what you're the expert on. And collectively, we come together as a team and get the borrower what they need, right? So everybody has a part to play. So I beg people to find the right advisor, use the right advisor. I also always tell them, please, please, please use the right counsel. That's so important. And you probably see it a lot when you're putting together purchase agreements and stuff like that. If the borrower doesn't have the right counsel, or even sometimes the seller, it can get really, really ugly. And I mean ugly with like bogging things down. I know everybody wants to use their family law, brother-in-law's attorney for an M&A acquisition. Not
Mhm.
the best idea. Sure, he's a super nice guy, but when you're doing something like this, and I'm sure you would agree, you want to have the right people guiding and advising you and making sure you're protected. And that's what one of your counsel's jobs is to do.
I agree 3,000%. And even a bit for a business owner, they have that business attorney that they've been using for 20 years. They don't handle business sales every day. They don't know all the ins and out. They don't know what's normal and what's not normal. And we really need to make to protect you the best as a seller, to protect you as the best as the buyer. If you're going to have an attorney, make sure that you have an attorney that this is what they specialize in. They know what's norm, what's real, what the bank, what wording's going to help the banks, not help the banks, what's just reasonable. A few years ago, I dealt with a situation where the buyer and the seller both had attorneys that that were not M&A attorneys, and it was like pulling hair because they both wanted to protect their clients, but they did not understand what was reasonable and what was not reasonable, and they're pulling in directions that just wasn't practical for either party, and that ended up that me and the other broker ended up out of our own pockets hiring another attorney to negotiate between the buyer's attorney and the seller's attorney to get the deal done. And most recently, a couple months ago, I was dealing with a seller that they were using their attorney that they've used for 20 years for real estate. And I told them my concerns about that up front. And then about 3/4 of the way through, they agreed that they should have used an M&A attorney. So I agreed. And the whole team, that goes with the broker you're going to be using, goes with the lender you're going to be using. Like, not just somebody, this is what they do, but somebody that whether you're buying or you're selling, this is going to probably be the biggest transaction that you're ever going to have up to this point in your life. So, you don't want to just hire somebody that, I know somebody is an SBA lender. Oh, I know somebody is a business broker. I know somebody is an attorney. Like, you got to make sure these people really know what they're doing, and they're very seasoned, experienced, and knowledgeable, and they're at the top of their game.
Yeah. There's 3 things I tell a borrower every time I talk to them. Number 1, get your lender involved early. Whoever it is, right? Let them help you structure the loan. Let them, kind of guide you through the process, help you put things together. If you get someone involved early on, it's going to be a lot easier. I also tell them, interview lenders. Don't just choose the first one that comes along.
Or the one with the lowest rate.
Right. Listen, you're about to be together with this person on calls and, for a while, right? At least 90 days. Make sure that it's someone you can work with, someone that you trust and you feel is knowledgeable, not just the person that you got out of the yellow pages. It's a big deal. It's a big move. Make sure you're choosing the right bank. Make sure you're choosing the right lender. And then the other thing I always tell them is, hey, listen, if you choose Live Oak or you choose me or not, that either way, I want you to get the best loan possible, but I also want you to be able to get your questions answered. I am happy to be a resource to you throughout this process, whether I'm doing your loan or not. So you've got my number, you've got my contact. If you have a question, just let me know, give me a call, happy to answer it. That's what we do. That's what we do here at Live Oak. We're in support of the small business community all the time, and all we want to do is be the best resource that we can for them.
That's fantastic, Tammy. That's wonderful. What documentation should a business owner prepare in advance to ensure a smoother process?
The seller or the borrower?
Let's start with the buyer.
So they'll want to have a few things, and they want to have 3 years of the tax returns. They'll want to have a personal financial statement prepared, their assets and liabilities. They'll want to have, there's a basic application form that's just, basically, are you a citizen? Have you ever filed for bankruptcy? Those standard application questions. Make sure they have their resume up to date. That's going to be important. Any companies that they own. So if they already own a company, whether it's on a Schedule C, it's just something they dally with, or whether they have it actually on a separate EIN number, make sure you have those 3 years of tax returns, year-to-date income statement and balance sheet. For any business that they own 20% or more of, if they own 20% or less, they'll want to have their K-1s available. From the personal side, and also a debt schedule if they do in fact own a business on a Schedule C or a separate tax return. As far as the seller will want to see, last 3 years of tax returns. year-to-date profit and loss statement and balance sheet. We're coming close to the end of the year now, so we'll be starting to ask for the tax returns likely in March or April, if we can get them. Until then, we'll typically use the year-end 2024 and then into 2025, as to not slow the process. We'll typically look at accounts receivable and accounts payable to determine any customer concentrations that might be there or vendor concentrations. We'll look at the bank statements. Typically, I won't ask for bank statements, and I think this is important because I don't want people to get the impression that we're asking for a lot of documentation that's unnecessary. I won't ask for those bank statements until we're actually going to go to our underwriting stage where they will actually reconcile them. And at that point, they know that they've got a proposal, that a credit officer has looked at it, and we'd like to move forward and underwrite the loan. So there's just a little bit more confidence when they're able to tell a seller that, from our perspective, when they're asking just a little bit more documentation, that makes everybody a little bit more warm and fuzzy. And I can understand that. Everybody's looking for a level of commitment before they keep giving things. Yeah.
There's a couple things before we move on to the seller. There's a couple things you said I kind of want to reiterate. For buyers out there that are looking to do an SBA loan, I agree with you, Tammy. They should engage with an SBA lender sooner than later. And actually, before they start actually seriously looking for a business, talk to an SBA lender like yourself, Tammy. Find out the pros, the cons, because it's important that you explain that the buyer understands the pros and the cons and they can swallow the pill and it's something that they really want to do. And I know that you go over that with them. But then get a pre-qual letter from the lender saying that they're not pre-qualifying you on a business yet. They're just saying, hey, if this buyer finds a business that fits their expertise, we are willing to lend up to X amount of dollars for this buyer. We've already seen certain information, blah, blah, blah. And you also mentioned that they need to put together their resume. So they should put together their resume because the lender's going to need it anyways. So get the resume put together, get your pre-qual letter put together, and then when you go out and you start looking for businesses and you send it over to buyers, attach your pre-qual letter from the bank, attach your resume, and that way, I'm telling you, as a broker, as a listing broker, and I'm sure many of my colleagues feel the same way. If you're a buyer and you're presenting that information to me up front at the time you're getting a confidentiality agreement signed, you're going to move up on top of everybody else because I already know, hey, they've been pre-qualified. I can see your experience. So right out of the gate, I think that's really good preliminary information to have. Tammy, what about the seller? Anything that I don't want to go too far down of what everything the seller will need during the process, but things up front, it's usually probably stuff us brokers are giving you anyways.
Yeah, absolutely. Like I said, tax returns, income statements that are current, AR and AP reports. If there's any debt that's going to be transferred, we'll need to know what those debts are. But those are the pretty standards, I think, for the upfront from the seller. And I typically see folks like yourself and other brokers actually collecting more items. I love when I get a Dropbox and it's full of like equipment lists and asset lists and things like that. I'm like, oh, look, this is a great file.
Good start right out of the gate. A good start right out of the gate when you get a lot of it up front. What about how can business brokers help their clients, better understand and navigate the SBA process in general? What would you, as a lender, what would you like to see us business brokers do to make the process smoother for you?
Well, you know what is a super great tool that instituted, I want to say a year or so ago, might have been a little bit longer than that, is what we found was very, very helpful to brokers, much like yourself, is that they can send their buyers to what we call office hours that we hold every Tuesday. I believe it's at noon, and I can send you that information, Jim, if you ever want it. And it's a Zoom call with two of our regional folks, and they walk through the entire process with a potential borrower. They give them cash flow analysis worksheets. They give them tools that they can use in conjunction with you. I've had some brokers even go on it and they love it. They get all the tools and they're like, oh, this is exactly what the bank is looking for. I never knew, right? And it's an hour long, the questions and answers. And we have found that to be a great resource to the brokers in the community. It eases a lot of things for both sides. The buyer can get information. They're getting directly from brokers are getting direct information from the bank, and they're seeing how we're doing it behind the scenes. So you guys can try to mimic that process from the financing perspective, not from a valuation perspective, but from a financing perspective as to how could we work to get this business some financing. Are we going to have to use some seller note? Are we going to have to do a creative structure? Because some of those things might come into play for you guys sometimes as you're listing a business. Hey, we might have to get a little creative on this one. It's great business, but we might have to get a little bit more creative financing with a seller note or something like that.
Yeah, and I think it's really, really important if you're selling businesses that are going to sell for $500,000 to $5 million, that you as a broker, you don't need to know all the little tiny tidbits of SBA lending. I don't, but you should have a really good overview of what the process looks like. And Tammy, you've been gracious enough to sit on this show and do many episodes with me covering SBA lending. If you're a broker and you're kind of new to the SBA lending, I urge you to go watch a bunch of the videos that I did with Tammy and others on SBA lending and kind of get the basics down. I think that's number one, just getting a good overview, because I think we've done some really good videos that are going through the whole process of what to expect and things like that. And I think watching those videos would be important. And I think number two, as a broker, you need to kind of stay on top of the changes, the rules that change, and things like that, and criteria changing. And you're probably getting emails from lenders from time to time saying, "Hey, there was a change," and blah blah blah, and they're outlining the change. Or the IBBA is very good at putting out information when it comes to that. So anytime there's rules changes, just kind of stay on top of what those look like and what they are. And I think number three, and Tammy, you've been very gracious with this over the years for me, and I really appreciate it, is build a relationship with a couple SBA lenders that you can call up and say, "Hey, I'm working on a deal, and I've got this scenario going on, and what's your take on it?" Da, 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 da. And just having those good quality relationships with a couple really, really good SBA lenders like Tammy, I think is very, very crucial that you can call up.
Mm-hmm. Yeah, absolutely, absolutely. And speaking of experts, not that you weren't always, but did I hear an announcement that you were elected to the board of IBBA recently or something like that?
As the IBBA state incoming chairman for 2026. So
Congratulations. Congratulations. That's amazing.
Well, Tammy, I really appreciate you joining today. I really do. Thank you for debunking all these myths that we hear about SBA lending, and I hope the viewers got a lot of information out of it.
Absolutely. I'm always happy to answer any questions for you or anyone out there. So all you have to do is let me know, and I'm happy to jump on a call or smoke signal, text message, whatever you got.
Contact Tammy. Her information is right below her. Well, hey, thanks a lot for joining. I really appreciate it. Until next time, take care.